Good evening, everyone. I hope you all are taking care of yourself and adhering to all the precautions. Friends, in today's webinar, we will be discussing the recent changes which are effective from 1st of January 2022. We will not only discuss the change, but also its practical implication at ground level. Moving on to our first amendment. This amendment is in section 16 of the CGST Act, and it directly impacts our 2A or 2B versus 3B reconciliations, which we all have been struggling in last couple of years. Friends, as we are aware, the eligibility to take input tax credit is derived by section 16 of the GST Act. Under section 16, we have various conditions basis which credit is available. First condition, I should have a valid tax invoice or a debit note or a bill of entry for availing the credit. Second, I should have received the goods in my premises, then only credit is available. Third, supplier should have paid the tax to the government. Fourth, I must have filed my GST returns. Now, a very important condition has been introduced in section 16, which will be effective from 1st January 2022. And before we discuss that particular condition and how it impacts us, let us recapitulate what has happened in last 4.5 years in respect of all these inward reconciliations. Friends, if you recall, when GST was implemented with effect from 1st July 2017, we had a concept of Gstr 1, Gstr 2, Gstr 3. What was designed and conceptualized at that moment of time was that the supplier would upload the invoices in Gstr 1. The same will get auto-populated to the recipient in their Gstr 2, and the recipient was supposed to accept, reject, and undertake an action on the invoice, which was auto-populated. And then Gstr 3 would have been auto-drafted. So there was a mechanism of Gstr 1, 2, 3 and a two-way auto-population mechanism, which was designed and which was conceptualized to be implemented. However, due to technical glitches, it was never implemented. So we only had Gstr 1 and Gstr 3B. So when we were filing our August 2017 return, September 2017 return, we just used to fill Gstr 1 and fill a consolidated return as Gstr 3B. In Gstr 3B, we only given input tax credit at consolidated level. The details are shared at consolidated level in Gstr 3B, and there is no invoice-wise bifurcation. Then in September and October 2018, there was a new concept, Gstr 2A, which was introduced by the portal. So from September and October 2018, we started seeing Gstr 2A on our portal, and thereafter department became active, asking all the taxpayers to undertake 2A versus 3B reconciliation. And then 9th October 2019, Rule 36.4 was introduced. In Rule 36.4, they specifically inserted a provision stating that the maximum credit which a taxpayer can get is something which is getting auto-populated and which is matching with their books plus 20% provisional credit. So with effect from 9th October 2019, they introduced Rule 36.4, wherein they allowed only matched credit plus 20% provisional credit, which can be availed by the recipient. Please note, there was no amendment in the Act. Act nowhere said about 2A, 3B reconciliation, etc. It was only in Rule 36.4 they introduced that the maximum credit which you can get is what was auto-populated plus 20% provisional. And thereafter, this provisional credit was reduced and is now 5% effective 1st January 2021. So it was ultimately reduced to 5% from 1st January 2021. Simultaneously, friends, if you recall, from 1st January 2021, they came out with another MIS report in the form of Gstr 2B. So we had both in the last year, Gstr 2A plus Gstr 2B. And in the rule, it was nowhere mentioned whether you have to do reconciliation with 2A, with 2B, nothing. It was morally as a MIS reports. There was no explicit provision from whom you have to reconcile. Gstr 2B is static, whereas 2A is dynamic. So this is the history of last 4.5 years. Simultaneously, various matters are pending before High Court, wherein all the advocates, consultants, everybody is trying to argue that, sir, there is no provision in the act which asks us to do reconciliation, etc. Section 16 is silent on this part. Basis this, lot of litigation pending at High Court level. Now, in Finance Act 2021, they came out with an amendment, which is effective from 1st January 2022. And what is this amendment? They introduced subclause AA in section 16, subsection 2 after clause A. And what is the new subclause which they have introduced? Let me read out a very important amendment. Let us read out together. The details of the invoice or debit note referred to in clause A has been furnished by the supplier in the statement of output supplies, and such details have been communicated to the recipient of such invoice or debit note in the manner specified under section 37. So rule 16 subsection 16 subsection 2 subclause AA, it says that the details of the invoices, that is the supplier has to upload the details of the invoices which they are issuing in their Gstr 1, that is statement of output supplies, and such details has to be communicated to the recipient in the manner specified. Now it is for the first time they are introducing a particular section, a provision under the act which mandates the supplier to upload the invoice and which has to be communicated to the recipient as a condition for claiming the credit. Section 16 talks about the condition basis which credit is available, and now this is one of the conditions which they have introduced, that the supplier should upload the invoice and the same should get auto-populated to the recipient. Simultaneously with this amendment, they have also amended Rule 36(4), and we need to read both Section 16 amendment as well as Rule 36(4) amendment together to understand the impact of this amendment. What is Rule 36(4) amendment? Rule 36(4), they have amended and said that the ITC will be available to the registered person to the extent of, first, eligible credit in respect of invoices or debit notes which have been uploaded by the supplier in section 37 in the statement of output supplies in form Gstr 1 or using IFF facility. So ultimately, just like section 16, this rule is also saying that the supplier should upload the invoice on the portal in their Gstr 1, or if he is under quarterly returns procedure, then he may use the IFF facility for the purpose of auto reporting the invoice on the portal. Second is a very main condition. Please read it carefully. The details of such invoices or debit notes have been communicated to the registered person in form Gstr 2B. Rule 36(4) now says supplier should upload in Gstr 1 or IFF facility, and the same should be communicated to the recipient in form Gstr 2B. So reading together section 16 amendment and Rule 36(4) amendment, it is clear that after 1st January 2022, credit will be available to a taxpayer only basis reconciliation of Gstr 2B versus 3B. So ultimately, I have to download the data in form of Gstr 2B from my portal, reconcile with my purchase register, and then only I will be in a position to take the credit. They have made it explicitly clear that the credit will be available basis Gstr 2B and not 2A. So so this particular amendment has a big impact on every taxpayer. Now we will discuss the practical implication of this amendment. So what we have discussed till now is that they have provided a specific section 16 to subclause AA. They have amended Rule 36(4) and ultimately made their intention clear. Taxpayers, please do your reconciliation from 2B, do 2B versus 3B exercise, and accordingly take credit in 3B. Now, what is the practical implication of this particular amendment? First, is this amendment applicable to import of goods or RCM credit? Friends, if we see Gstr 2B, in Gstr 2B, you are also getting import details. But what we have practically faced is that the import details, which is being shown in Gstr 2B, sometimes is not correct. So whether this amendment is applicable on import of goods also, I will not get the credit if the details of bill of entry is not coming in Gstr 2B. Friends, please note that this amendment is only applicable in respect of your domestic purchases, wherein supplier is raising a GST invoice on you for the supply of goods or services. It is not applicable on supply of import of goods. Similarly, it is not applicable on reverse charge mechanism. In case of reverse charge, you only pay the tax and take the credit. Please note, under RCM mechanism, you can pay on the same month and take credit in the same month. Hence, this particular amendment not applicable on import of goods, not applicable on import of services, not applicable on various RCM credits like legal services credit, sponsorship, etc., which you pay under reverse charge and take credit. It is only applicable on the invoices or the debit notes which are raised by the supplier on you, and not applicable in other situations. First practical implication of this amendment. Moving on to the second implication. Very interesting, very important interplay between section 16.2 AA and section 16.4. Friends, if you recall, what is section 16.4? Section 16.4 prescribes the time limit within which you can avail the input tax credit. So as per this law, in respect of invoices, in respect of your inward invoices, your purchase invoices, which are dated in financial year 2021, from 1st April 2021 till 31st March 2022. So whatever you are procuring, whatever are your inward supplies in respect of invoices whose date falls between 1st April 2021 till 31st March 2022, the last date for availing the credit is September 2022. So all invoices pertaining to financial year 2021-22, last date for availing the input tax credit is September 2022. This is one of the condition. Second condition, which is now introduced under section 16.2 AA, is that you can take credit only after reconciliation. There is no concept of provisional credit of 5% anymore. It has gone away with this amendment of Rule 36.4. There is no more concept of provisional credit of 5% which is applicable. So you will be in a position to take the credit only and only if the invoice is matching, it is getting auto-populated in your Gstr 2B. If we read both the conditions simultaneously and link these conditions together, the conclusion is that if your supplier is issuing invoices in the month of, say, January 2022, February 2022, March 2022, you will not be in a position to take the credit if they are not uploading on the portal and the same is not getting reflected in your Gstr 2B. And if they don't upload this till September 2022, I repeat, if your suppliers don't upload these invoices till September 2022, since you don't have the provision to claim any provisional credit, this ITC will be lost. I repeat, this ITC will be lost. And if your supplier effectively upload this in October 2022 or November 2022, though he will have to pay tax along with interest, but you will not be in a position to take the credit. Unlike what was happening today, because of the concept of provisional credit of 5%, I was in a position to avail credit to the extent of 5% at least. Now, this will no more be applicable after this amendment. So we have to be very, very cautious. And there comes the role of vendor management, contract restructuring, and deciding the payment terms of GST to the vendor. Friends, you have to make sure your suppliers uploads the invoices on timely basis and the same is reflected to you on timely basis so that you can avail the credit. If there is a delay by the supplier in uploading the invoices on the portal, if they upload, say, on October 2022, November 2022, the credit is lapsed. Hence, we need to make sure that all our purchase orders, all our contractual contracts which are entered with the vendors, they clear-cut mention the terms related to the GST. They clearly mention that the vendor is required to comply with all the provisions of GST, including timely uploading of invoices, including issuance of e-invoice, blah, blah, blah. Similarly, you can also look at the time to decide when do you need to pay GST to them. You make a policy that only when the same amount is reflected on your Gstr 2B, then only you will make payment to the vendor. And it all depends upon the kind of vendor you are dealing with. There are certain dominating vendors where it is not possible. So based on your all individual clients' need, etc., a call has to be taken. But this is most important, very important. We have to take this reconciliation exercise clearly. Moving on to the next implication of this amendment. So what we discussed in this amendment is that the supplier should upload the invoice. It should come in your Gstr 2B. Friends, in last couple of years, I have practically witnessed many taxpayers receiving show cause notice, not 2A 3B notice. That is the most common notice. I think every one of your clients will be getting 2A 3B mismatch notice, etc. I am talking about a notice which states that it is given to the recipient taxpayer, stating that you have made purchases from 100 suppliers. These 100 suppliers have uploaded in GSTR 1, but they have not filed their GSTR 3B, and hence you are required to reverse the credit. These kinds of notices are also coming, stating that your supplier has filed GSTR 1, but they have not filed GSTR 3B, hence you are required to reverse the credit. And basis this notice is section 16(2)(c). They rely upon section 16(2)(c) to state that one of the conditions for taking the credit is that, subject to the provision of section 41 and 43A, the tax charge in respect of such supply has been actually paid to the government either in cash. So what the notices say is that no problem, it is coming in your GSTR 2A, it is coming in your GSTR 2B, fine enough, one condition satisfied. Apart from that, another condition under section 16 is that supplier should pay the tax, and he can pay the tax only if he files GSTR 3B. Since his filing status of GSTR 3B is nil, he has not filed. Therefore, you are required to reverse the credit. So friends, as a matter of practice, I would advise you going forward, please make a strategy not only to reconcile your GSTR 2B versus 3B. When you do this reconciliation, also make sure that your supplier has filed GSTR 3B. So you can undertake this exercise of reconciling whether your supplier has filed 3B or not, because when you download GSTR 2B, you get a status, 3B filing status of your client. So you should also keep a note of that GSTR 3B filing status. I'm not asking you to do that reconciliation on monthly basis. Make a practice of doing it on quarterly basis, half yearly basis, so that you are aware whether your supplier has filed the 3B or not, because these are the kind of notices which are being getting issued by the taxpayers, by the tax authorities. In spite of the fact that the invoice is coming in your GSTR 2B, if the supplier status of 3B is not filed, 3B filing status is not filed, you may get a notice. So as a good practice, make a habit of reconciling this. Now, discussing this point from legal perspective and from litigation perspective, am I actually required to reverse the credit? My view is no, you are not required to reverse the credit, because section 16(2)(c) itself is not implementable in India. This section 16(2)(c), please see, it is subject to the provision of section 41 and 43A. And the way section 41 and 43A is drafted today, all these sections are based on the earlier concept of GSTR 1, GSTR 2, GSTR 3. There is no amendment in section 41 and 43A yet. I repeat, there is no amendment in section 41 and 43A yet. Therefore, even supplier has not deposited the tax, you are not legally required to reverse the credit, because this condition itself is not implementable. But as a matter of good practice and to avoid any dispute, make a habit of doing this reconciliation in future. Moving on to the impact of this amendment in December return period. Whether this amendment is applicable in December month return period, which I will be filing on 20th of January, or it will be applicable from January return 3B. The answer to this lies with the judgment of Honorable Supreme Court in the case of Osram Surya Private Limited. I repeat, Osram Surya Private Limited. In this particular case, the court have held that you have to see the law which is applicable at the time of availing the credit. That is the law which you have to see when you are availing the credit. Friends, please note, in pre-GST regime, when I used to avail the credit, I used to avail the credit in my books of account. Return was only for the disclosure purpose. Whereas the way law is drafted in GST, credit availment is set to be completed only once you file your GSTR 3B. That is, your availment takes place only when you file your GST return and the amount is credited to your electronic credit ledger. Since your December month return will be filed on 20th of January, and it is on 20th of January you will be availing the credit, by virtue of which the amount will be transferred to your electronic credit ledger. This amendment, which is now applicable from 1st January 2022, will be applicable also in respect of your December month return period. So based on this Supreme Court judgment, This amendment is applicable in respect of your December month return period, meaning thereby you cannot take the benefit of GSTR 2A or 2B reconciliation. You have to do the reconciliation with GSTR 2B only. Second, there is no provisional benefit which is available. Provisional credit 5% relaxation for December month return period. Availing provisional credit of 5% in respect of December month return period will be highly, highly disputable. Friends, an interesting part to note is that the amendment which the government has made in section 16, it is not retrospective. Please note that this is for the first time they are introducing a condition in section 16 itself, stating that uploading of invoice by the supplier and auto population of the same to the recipient is one of the conditions for availing the credit, and this condition is applicable prospectively from 1st January 2022, and it is not applicable retrospectively. In Finance Act 2021 itself, they have done certain other amendments, which in fact Geetika will also be taking, which are applicable retrospectively. Say amendment in respect of association of person, the definition of supply, which they have made effectively. So in Finance Act 2021, you have certain amendments which they have done retrospectively, and certain amendments they are silent. And the way they have amended section 16, they have not done this retrospectively, and hence it's a prospective amendment. Since it's a prospective amendment, to my mind, it is for the first time such kind of condition is introduced in section 16, and for the period prior to 1st January 2022, whatever 2A 3B notices which we all are receiving, we might be receiving such kind of notices during scrutiny of returns under section 61, 2A 3B mismatch notice, even during GST departmental audit. Departmental officials are raising these kinds of issues of 2A 3B mismatch. And also you are getting show cause notice under section 73-74 for the last 4.5 years. To my mind, it's a very, very good case to argue that no reversal is required. No reversal is required because there was no condition under the act. The IT system was not ready. Section 41 and 43A not yet implemented. There was no such conditions. And I, being a bona fide purchaser, I'm not a party to any fraud, etc. I have purchased, I have satisfied all the conditions, I have a copy of invoice, I have made the payment, I have used the goods, I have received the goods. So why reversal required? And in fact, recently in GST regime also, we are getting few favorable judgments like LGW Industries Limited, Calcutta High Court. Very beautiful judgment wherein they have said that until and unless you prove that I was a party to any kind of fraud, etc. And if it is my genuine transaction, genuine purchase, then please don't recover tax from me. Even Madras High Court said, go and first recover the tax from the supplier who has not paid the amount. Even in pre-GST regime, we have a plethora of judgments which have bifurcated the purchaser into two categories, genuine purchaser and fraudulent purchaser. So if I am a genuine purchaser, I have satisfied all other conditions. To my mind, very, very good case to argue for the past period, no reversal required. However, effective 1st January 2022, the law is very stringent. Act has been amended, rules can be amended. Please take this reconciliation exercise very seriously. With this, we will now move on to our second amendment. There are certain issues and questions which are being raised in the chat box also. So we will be taking up all these questions in the end. You can keep on writing whatever issues you are facing. Moving on to the second amendment in respect of recovery of taxes in case of difference between GSTR 1 and GSTR 3B. So in simple terms, this amendment says that if your GSTR 1 liability is more than your GSTR 3B liability, see in GSTR 1 crore rupees liability shown. GSTR 3B, you discharge only 40 lakhs. There is a shortage of 60 lakhs. We can straight away go and recover money from you. How to recover? We can contact your customers. We can attach your bank account. We can hold your refunds. We can sell your movable and immovable property. We can directly do so. And to appreciate this amendment in detail, let us first understand the litigation process which is generally followed in GST law. What is the process which a taxpayer or a tax authority has to follow in GST? So entire litigation under GST can be divided into various buckets. First is your assessments. Second is your audits. Then we have adjudication. And then we have search, seizure, summons, etc. And thereafter appeals. So section 59 to section 64 deals with assessment. Say one of the section is scrutiny of returns. If there is a difference between GSTR 1 and 3B, or there is a difference between 2 and 3B, you get an assessment notice. under ASMT 10. If you reply, the officer is satisfied, transaction over. Otherwise, he proceed to issue a show cause notice under section 73 and 74. So if assessment is not closed, your scrutiny of returns, the officer is not satisfied, he cannot create demand under scrutiny of returns. He will proceed to issue a show cause notice to you under section 73 and 74, for which you have to make a reply. Similarly, during audit, whenever department people conduct audit, if there are certain objections, they issue you an audit objection. You have to reply to them. If they found it satisfactory, okay. Otherwise, they will proceed to issue a show cause notice under section 73 and 74. Similarly, if any summon is given under section 70 or any search is conducted or raid or survey is conducted under section 67, they cannot issue any, they cannot ask you to deposit any amount legally. These all are fact-finding exercise based on the findings of search, based on the findings of survey, based on the statement recording during summons. The next step which they can take is to issue you a show cause notice under section 73 or 74. So what I want to say is that the way GST litigation process is drafted, whether it is assessment in form of scrutiny of returns, whether it is departmental audits, whether it are summons, search, seizure, ultimately you will get a show cause notice under section 73 or 74, for which you have to make a reply. 73 is non-fraud cases, 74 is fraud cases. So if you, when you submit the reply, officer agrees, the demand is dropped. Otherwise, he confirms the demand. And once he confirms the demand, then the tax is payable within 3 months under section 78. So whenever an adjudication authority confirms the demand pursuant to a show cause notice, that the same stands payable to the government within 3 months from the date of service of such confirmed order. However, there is an exception. The exception is that you file an appeal against that particular demand order. So there is a demand order which is confirmed. You get 3 months time to file an appeal. And if you file an appeal, the demand gets automatically stayed. If you don't file an appeal, then within 3 months, they will start the recovery proceedings. And what are the kinds of recovery proceedings? Deducting money from your refund amount, which is due, recovering from a third party, selling your movable and immovable property. So there are various recovery provisions and recovery mechanism under section 79. So this is generally the litigation process which is followed under the GST law. Now, what they have done is that section 75 subsection 12, very important. Let's read together very clearly. It says that notwithstanding anything contained in section 73 or 74, it does not matter what is there in 73, 74. I will not go by this SCN process, etc. In case of self-assessment tax, the departmental official have the right to directly start the recovery proceeding under section 79. So what do you mean by self-assessed tax? Now in this amendment, they have introduced the definition of self-assessed tax. And what does this self-assessed tax means? For the purpose of this subsection, the expression self-assessed tax shall include the tax payable in respect of details of output supplies furnished under section 37, but not limited in returns furnished under section 39. So they have clearly mentioned that if your GSTR 1 value is more than GSTR 3 value, in our example, GSTR 1 value 1 crore rupees, GSTR 3B value 40 lakh rupees, 60 lakhs you didn't pay the tax, they can straight away go and start the recovery proceedings. They have been given the enough power, no requirement of issuance of any show cause notice under section 73, 74. So in case of self-assessed tax, that is where GSTR 1 figure is more than 3B figure and there is a short payment of tax, they can straight away go and proceed with the recovery provisions. No show cause notice required to be given. Very, very dangerous provision given in the hands of the officers. And they can actually misuse this. There can be, in fact, genuine reasons for difference between GSTR 1 and 3B. For example, my supplies was 5 lakh rupees. By mistake, I entered in GSTR 1 50 lakh rupees, but I paid tax correctly 5 lakh rupees in 3B. So it's a genuine mistake. I can rectify in subsequent return period also. But what if I get a notice before that? Considering the practical difficulties which the taxpayer can face at ground level, GST policy wing has come out with the guidelines in respect of such amendment issued on 7 January 2022. And what does this guideline says? These guidelines says that there can be genuine reasons for difference between GSTR 1 and 3B. So before taking any action, please provide an opportunity of providing reasons for such difference to the taxpayers. So these guidelines specifically provides that whenever you find a difference between GST 1 and 3B on your screen, tax authorities don't go and start the recovery proceeding. Please give an opportunity to the taxpayer to prove their reasons for difference. If you find it satisfactory, okay. Otherwise, go and start recovery proceeding. So now so it is now my responsibility to make officer understand if there is a genuine difference between GST 1 and 3B. It may be on account of amendments related to previous year. There can be lots of reasons. It is my duty to make sure that I make officer understand the reason of difference. If he does not understand, he can always start recovery proceedings. He can create nuisance and harassment at lower level. To what extent these guidelines will be implemented at lower level, nobody knows. Remember Rule 86A? Rule 86A talking about blocking of credit. Rule itself says you cannot block after 1 year. The maximum period for which blocking can be done is 1 year. Whereas we have seen clients whose credit is blocked for more than 1 year, 1.5 years, 2 years. No guidelines followed, not even rules followed. If we show these rules, what the answer officers gave, they say, okay, I will unblock and again block it the very same moment. So this is the kind of harassment which is actually growing at ground level. So we just pray that this immense amount of power which is given to the officer, they don't misuse it. The purpose of giving this power is to actually start recovery proceeding in case of genuine reasons wherein people is actually engaging in fake invoices, the person may run, etc., etc. Not in genuine cases, we hope. Friends, after discussing these two amendments, Section 16 Amendment and Section 7512 Amendment, we all can understand how important reconciliations are in GST law. You have to make sure your GST 1 versus 3B versus books are properly reconciled. Your 2B versus books are properly reconciled. So please take this reconciliation exercise on regular basis. Prepare proper backup, because whenever you are issued a notice, you have to show these reconciliations only. Very important. Moving on to the next amendment is change in GST rates in respect of services provided to governmental authority and government entity. Friends, under GST law, there are 4 types of concept which is prevailing. 4 kinds of recipient. First is government, like Delhi government. Second is local authority. There is a complete definition of local authority, and local authority is more in nature of municipalities or an authority who are actually governing the, controlling the, and managing the municipal funds, more like a municipality. Then we have something called governmental authority. So when we talk about local authority, say MCD, Municipality of Delhi, Municipal Corporation of Delhi, it's a local authority. Delhi government, it's a government. Governmental authority, it is not a municipality. It is not a government. It's a separate authority or a board or any other body set up by an act of parliament or established by a government with 90% or more participation by way of equity or control to carry out any function entrusted to municipality under section article 243W of Constitution or 243G of the Constitution. So I will just give you an example. Governmental authority is just like Delhi Jal Board. Delhi Jal Board is not a local authority. Local authority are generally those authorities wherein the people who are managing are those people who are generally elected by the, directly or indirectly elected by the people living in that particular area. Whereas in governmental authorities, those people are not managing. They are generally IAS or these kinds of people who are managing. So there is a complete difference between government, local authority, government authority, and government entity. I'm not going into each of these difference in detail. I will be focusing more on the amendment. So I will just take an example. Delhi Jal Board is a governmental authority. And then we have government entity. Government entity is an authority or a body or any society, trust, corporation who is set up by an act of parliament or established by government to carry out a function entrusted by central government. For example, BSNL has been given a function to lay down some defense pipelines. So in that capacity, they act as a government entity. So earlier, what was there under the GST provisions? When we see the rate notification and exemption notifications, I will take 1 or 2 examples to understand this amendment. For example, construction of water treatment plant, construction of water pipelines, or construction of schools, educational institution, clinical, hospitals. So construction of educational institutions, hospitals, water treatment plant, water supply plant, etc. All these were taxable if at the rate of 12%, if you are providing it to first government or local authority or government authority or government entity. Now this beneficial rate is applicable only if you are providing these services to government or local authority. If you are providing these services of construction of water treatment plant, construction of hospital, educational institution to a government entity or a governmental authority, then the rate of GST has changed from 12% to 18%. Meaning thereby, if the contractor is constructing a water treatment plant for a local authority, say MCD, Municipal Corporation of Delhi, rate of tax is 12%. However, if that particular contractor is constructing a water treatment plant or a school or a hospital for a governmental authority like Delhi Jal Board, the rate of tax has increased to 18%. So friends, all those works contractor, EPC contractors who are into this business, please look at the identity of your customer. Please check whether they are government, whether they are local authority, whether they are governmental authority or government entity. If they are government authority or government entity, the rate of tax has changed from 12% to 18%. So in respect of ongoing projects, you have to make sure you have to read your agreement and see the change in law clause and see whether for the billing which I will be doing after 1st July 2022, if I am charging 18%, will my recipient pay 18% or they will pay only 12%? What is the change in law? Please examine your contracts, examine your recipient, and accordingly implement this change. Very, very important change. With this, now we will move on to our next amendment, which will be taken by my colleague, Geetika Shrivastava. Over to you, Geetika.
Thank you, Tushar. Good evening, everyone. Thanks for joining the session, that too on the weekend evening. I hope you all are keeping safe considering the increasing COVID cases. Wishing all of you to be very safe. With this, I'll start my session. This amendment is relating to provisions relating to provisional attachment. Now, I'll just extend this, what Tushar had said in his session while, talking about the adjudications that the officers are issuing, the notices they are issuing. So this is one of another provision which was there in the law in under section 83, where the government officers have been given powers to provisionally attach the properties. Property can be a bank account or immovable property of the taxpayers, in case there were certain proceedings which were pending against under section 62, 63, 64, 73, 74, the ones they have been listed down, basically mostly relating to, assessment related, any proceeding was going on, or any show cause notice were there, any inspection search was going on. So during the pendency of these proceedings, the tax authorities had powers to attach the property of the taxpayers. Now, what started happening that the tax authorities, they started just left, right, center. They started attaching the authorities, even of the third person, when the law was very clear that, they should only approach against the person against whom the proceedings are pending. Any the business partner of that person or any other third party who is dealing with this person against whom a proceeding is pending should not be roped in these kind of inquiries. So a lot of cases were, raised, the issues were raised, a lot of cases went before the High Court, and fortunately, most of the high courts, they gave the favorable judgments in the favor of taxpayers, saying that in case, if I talk about the first part of the definition, which talks about the pendency of proceeding, where the proceedings have been completed. Say, for example, a search initiated, it got completed, and then officers going back to their office and then again attaching the properties provisionally. In all such cases, the high courts, they have held that since the proceedings are not pending, you cannot attach the property of any of these taxpayers. Likewise, if I look at the that part of definition, where to the extent of which the officers could go to attach the property, they were going even to the attachment of the bank accounts of third persons, let's say the vendors, the customers and all. So there again, the High Court said, and they safeguarded the taxpayer, saying that since they are not even party to any such proceeding, you cannot initiate any provisional attachment proceedings against these third parties. So what happened? This matter traveled to the council, and they had the tax authorities, they said that with such kind of an interpretations the courts have been giving, these provisions are limiting our powers. And the whole purpose of having this kind of a provision was to catch hold of malafide taxpayers, and we are not able to do it. So what happened? After hearing the tax authorities, there was this amendment which was proposed in Finance Act 2000, Finance Bill 2021, and which has now become effective from 1st January 2022. Please hear this very carefully. The change that has happened in this section is that earlier it was about the pendency of any proceeding. Now the change has shifted to initiation of any proceeding. There is a difference between pendency and initiation. I will not get into technical details, but for the understanding of the participants, pendency, like I said, was something where any particular proceeding got initiated and did not get concluded. It was something was considered as pendency. But initiation is a very wide coverage. It initiation means it starts but doesn't talk about being concluded. So in case any of the proceedings have been initiated, whether or not they have been concluded, the tax officers would have the powers to attach the property, the bank accounts, etc. of the persons against whom the proceedings have been initiated, irrespective of fact that which particular proceeding was initiated and concluded. Because pre-amendment, this is what the assessees used to argue before the court, that my assessment, my proceeding under section 62 or my proceeding under section 67 has been completed, and in the meanwhile, when the officers are doing their further studies or they want to initiate further proceedings, in between they cannot attach the property, and that's what the court held. With this kind of change, now the officers will have the power to even attach their property in case of the attached property of the taxpayers, even in case any particular proceeding under any section has got initiated and concluded. Because they are in the process of investigation, they are in the process of adjudication, they might raise a step, the next level of proceeding again, but in between they got the power. Because this is something was very much required in case of any malified taxpayer. In case this kind of a provision is not there, then these people might just wipe off their properties. They can withdraw money from the bank accounts, sell off the properties and all. In the meanwhile, the next level of investigation or the proceeding starts. Another part that happened, the change that is going to happen is, earlier there were very limited sections under which, if the proceeding was pending, the provisions of provisional attachment could be initiated. Now they have covered even more provisions falling under chapter 12, 14, 15. If you see, it's mentioned on the slide, if there is a self-assessment. Self-assessment was something which was not earlier covered under provisional attachment. Only if it was a best judgment, scrutiny, etc., or when it was a section 73, 74 notice, search proceedings. Now everything, whether it is assessment, whether it is an audit, even in the case of someone, they can attach the properties of the taxpayer because of this wide power that has been given to the tax officers. The third part of the change that has happened in the definition is who can, to what extent the tax authorities can go and who all can get covered under this provision. Earlier, it was only the property of the taxable person against whom the assessment was pending or any proceeding was pending. Now they have extended this provision even to those people who are not, against whom these proceedings are not pending, but who are party to any of these following transactions, or who are making any benefit out of it. Again, why this kind of an amendment was required? What was happening was that in between, ever since GST has come, there were a lot of shell companies, fake invoice companies, which have cropped up. So if the person who is actually doing the transaction is not in picture, so there could be a third person who's a mastermind, who's guiding and doing all the guiding and asking the person to do all these types of transactions. And when the authorities used to go against the person who has issued long invoicing or who's into malified transaction, this is a person who has no assets, no property, no money in bank account, which could be attached to save the government's revenue. So that's where the government thought that this is something where we are getting crippled, we are handicapped, we are not able to protect the government's revenue because the person who is there in the picture is someone who is not having any property, any background. So in order to take in charge of those people who are controlling these types of transactions, very clearly the government has mentioned that any person who is retaining any benefit or on whose instances these types of transactions, what are those specific transactions? When any supply of good is happening without invoice, any invoices being issued without without a supply, which is what we in general terms we call as fake invoicing scenario. Anyone who's taking credits, etc., without receiving goods and services. Anyone who's distributing ITC in contraventions of the provisions of the law. So all these four scenarios, if any situation of this kind is coming up, and even if there is a third person against whom these proceedings under chapter 12, 13, 14, 15 have not been initiated, we give you the powers to attach even the property of these people. So all in all, the bottom line is that government is not going to spare anyone who is getting into any malified transaction, and very specifically these fake invoicing and the circular trading transaction. The idea is not to catch hold of any bona fide taxpayer, but please be aware that these kinds of powers, like Tushar has mentioned in earlier session also, that these powers are normally being abused. I will not use the term misuse. They are being abused by the tax officers. So whenever you are dealing in any such transaction with any person, you have to be very careful that any transaction which is being reported, it is factually correct. You are paying correct taxes. You don't end up taking credits without having correct documents, because at one point of time you might have the argument that these are compliance glitches, etc. But to start with, the department can always initiate these kind of inquiries, and they have been given all the powers to attach your property. Trust me, getting your bank accounts and your property attached is only going to disrupt the business at large. So please ensure that any such transactions, when they are happening, you are ensuring all the compliances, and you don't fall in the situation where even if you are a bona fide taxpayer, the authorities start initiating such proceedings against you. Now, another very important amendment that has come up in this budget, 2021 budget, which has become effective from 1st January 2022, is amendment in the detention and the seizure process. There are very minute amendments have also been brought in, but we'll focus on the very important amendment, which is the change in the penalty clause. So what has happened is, the earlier provision, which was under section 129, wherever if there was any contravention of any law, and any goods or any conveyance was being detained by the officers in transit, then there were options given to the taxpayers that either they can pay tax, which is applicable tax on those transactions, and 100% penalty, and get the vehicle and the goods released from the officers. And wherever this was the case, when the owner is coming up and paying the taxes, and if the owner is not coming up, let's say the transporter or someone else is just getting the goods released, then it was applicable tax and 50% penalty, which was to be paid to get the goods released. Now what has happened is that because of this amount which was being collected as a tax, there was a lot of hue and cry among the taxpayers that you can detain my goods, my truck, or my conveyance for any non-compliance. It is not just that because I have not paid the tax and therefore you are detaining my conveyance and goods. You are detaining it for any XYZ reason. Now, technically, if I have a bona fide taxpayers, and I have paid my taxes, I have issued the tax invoice. Due to any minute glitch and all, you have detained my conveyance and my good. So you are forcing me to pay tax twice. One, when I have genuinely paid the tax on those transactions, and second, to get my goods and my conveyance released. So again, there were a lot of ambiguities around whether this is in the nature of tax, or it is in the nature of penal. If it is in the nature of tax, can someone take the credit, etc., and etc. So all these things, while this was all being discussed and was creating all the confusion and the ambiguity amongst the taxpayers, the government has very clearly and cleverly come up with this amendment saying that whatever we are collecting from you, it is in the nature of penalty, and they corrected the word from tax to covering everything under penalty. So the intention was very much clear that whatever I'm collecting, while they have written it as 100% tax and a penalty, the intention was always to connect it as a penalty, and they corrected those words, the language of the law. So therefore, if there is any such contravention, now any taxpayer whose goods and whose conveyance gets detained during transit has to pay 200% penalty of equivalent to the tax, which is payable on those goods. and only then they can get the goods released. If it's not done, the other option that is available with the taxpayer is to going into the appeal against the or detention order. Now here also there has been a change. Section 107 subsection 6 has been amended to increase the pre-deposit amount. Earlier the pre-deposit amount was 10% of the tax which was being disputed. Now it is 25% of the penalty. So earlier it was 10% of the tax, which was like 100% portion, and out of that also 10% of the that portion was to be paid. Now they have made it 25% of penalty, which is like 25% of the 200% amount that you're going to pay. So this is such huge amount that they are going to hold before you go for any appeal. So again, why we are discussing this, that sometimes small issues and small non-compliances are overlooked because we understand or we feel that they may not impact us in such a big way. But these kind of provisions, when they are coming up, which means the government wants the taxpayers to penalize for any non-compliances, and the penalties are so high that this is actually going to affect the cash flow of the taxpayers, because all this is collected in cash, nothing goes out of ITCs, etc. So you have to be very careful whenever you are doing any compliances. Keep these penal provisions in mind, because this is not just a payment of penalty which you can pay later on and all. Your goods are your stationed, your goods are detained, your business is put on hold, you have a customer who is waiting for your products to reach the so all in all it causes a huge business disruption. So this amendment again is going to impact the businesses very, very badly and adversely. So be very compliant in terms of whatever goods are moving and what are documents are moving along with the goods. Please don't take it very casually. It's been 4 years down the line, the GST has come, and people are pretty much clear about the requirements of the documentation. Now going to the miscellaneous part of the amendments, there are some various rate change, but we'll talk about very crucial sectors. Footwear, there has been change from 5% to 12%, irrespective of pricing. Similarly, the change was also expected in textile sector, but that has been put on hold. Seems like there has been some discussion which has gone into before with the lawmakers, that they have put the increase in rate in the textile sector on hold. So as of now, it is mainly the footwear sector which has increased from 5% to 12%. Another change that has happened in the e-commerce area is one, the transport passenger facilities which were being operated through e-commerce platform. Earlier, there were certain exemptions on which no taxes was to be paid. But now all those exemptions have been withdrawn, like non-AC carriage and stage carriages and all. Even if they were operating through the e-commerce operators platform, they were not being taxed. But now everything is falling under taxes. So any e-commerce operator, any person who's dealing with the e-commerce operator has to ensure these compliances are being undertaken. E-commerce operator, they have to ensure whosoever is dealing with them, they are discharging the taxes for those transportation services which they are operating through their portal. Another very, very important and very critical change that has come up in the e-commerce sector is they have brought in the restaurant services within the ambit of e-commerce sectors. So now any service, any restaurant which is serving through the e-commerce, like your Swiggy's and Zomatos of the world, if any restaurant person is dealing with these people, now the liability for restaurant service shifts from the service provider to the e-commerce operator. Only exception that has been given is to the hotels which are having restaurants, and the hotels are having the tariff of more than 7,500 per day. Otherwise, if you are a 5-star restaurant and you're not falling within the higher category, you will still fall under the requirement of e-commerce operator, and the taxes have to be paid by the e-commerce operators. There are certain clarifications that have been issued, because this is a very specific change that has come for restaurant sector. So the doubts were coming up that how it has to be done, who has to do the billing. So if you see that normally restaurants, if you talk about outlets like Bikaner Wala, Haldiram, and any such eateries, they provide restaurant services also, and then they are having certain over-the-counter sales of certain packed products or some sweets, namkeens, etc. So the question that started coming up, that because we are falling under restaurant, whether everything which is being sold through the e-commerce platform has to be covered or not? Answer is no. Only the portion of the restaurant service, the serving of food, etc., cooked food, etc., which is being sold through the e-commerce portal, only that part has been, the liability of that part has been shifted to the e-commerce people. Rest continues to remain with the original service providers. So what has to be done in such cases? The billing, etc., has to be done very clearly. The supplies that are being made by the restaurants or these outlets for other than restaurant service, being the packed food supply or any other product supply, the liability remains with these people. They need to issue the invoice that the way they have been doing till date. Only when they are supplying the food, the cooked food through these portals, only for that the billing has to be done by the e-commerce, because they have been deemed supplier. They are the one who have to report this as their supplies. And the other person, the restaurant and all, for them it is no more a supply. And therefore the guidelines have also been issued, or the clarifications have also been given how the same has to be reported. So the restaurant, when they are making such supplies to the e-commerce portals, they will show these supplies, because of course there is an inventory out or a goods, the supply which is happening from their part, they also need to report it somewhere in their returns. They will show it under nil rated table A, and similarly corresponding table 3.1c in 3b. Likewise, the e-commerce operators, they will show it as their outward supplies, as if they have been the suppliers, because they are deemed the supplier. So this is how the reporting mechanism also has to be taken care. It's not just that the tax has to be paid. How it has to be paid? It is paid to be paid through these returns. Some more questions and doubts which were answered in this clarification was that in case of those supplies which are being made through e-commerce portal and for which the e-commerce portal has been made liable, whether TCS has to be deducted? Answer is no, because the purpose of TCS is only when someone else is paying tax, and it's just a first point of collection of tax. Where the entire tax is being paid by the e-commerce operator, no need to pay any tax, any TCS on this part. For other services, yes, like I said, for any over the counter sale, etc., any other supply which is not falling within the realm of restaurant service, the provisions continue to remain the same as they have been till date. Any person who is unregistered, registered, irrespective of that category, if they are providing restaurant service and working through the e-commerce portal, again the taxability is required. A very important question: the taxes that have to be paid by the e-commerce operator has to be paid only in cash. No ITC can be used. They do have certain ITC for certain input services, what the e-commerce portals, they they spend on their supplies or services. So any payment which has to be made for restaurant services through e-commerce portal has to be made in cash. No credits will be allowed. Next one, please. Now, this is another very important amendment, which is relating to the supplies which are being made between associations and their members. Very, very important and a very landmark judgment of Calcutta Club, which was issued by the Supreme Court in this case, wherein very clearly the doctrine of mutuality was brought in, and it was discussed that the members and the associations, they are one and same thing. You cannot disintegrate them and start treating them as a different person. So then, because of this kind of a judgment, the taxes or the any services which are being supplied by the associations or the clubs to their members, like we know, we are all someone who's part of any club. It could be any Rotary club, any membership club, any sports club. So you pay some membership fee, you get some benefits out of it. Sometimes you get concessional rate pay, you get the banquets, you get some concessional rate pay, food serving, etc. So all this was being considered. There was a lot of discussion around it, whether this should be taxed or not, whether the members should be treated as separate, for to which the Supreme Court now laid rest to this kind of a dispute, saying that no, both are same. We don't consider them separately, so nothing has to be charged or paid in terms of taxes if there is any transaction which is happening between the members and their association. Now, considering the loss of revenue at this aspect, at this juncture, the legislation thought is that this is the right time to, introduce this law. And this provision has been retrospectively introduced to say that the associations and the members are different people. The specific subsection under section A, section 7 has been introduced, saying that any activity or transaction by a person other than an individual to its member or constituents or vice versa for cash, etc., will be deemed as supply. Section 7 gives the definition of supply. So now with this amendment, whatever has been laid by the Supreme Court is overruled. So even if there was a concept of mutuality which was being discussed by the court and was being accepted, at large by public at large, now with this kind of an amendment, there is no more concept of mutuality. The members and the associations, or to be very specific, the language anywhere doesn't talk about the term association. It says person. So person is very wide to cover even any other kind of association of persons. Could be a joint venture, it could be a partnership firm, it could be a AOP where people come together. So in all these cases, wherever the members and these bodies which are constituted by joining the members will be considered as two different persons, and any transaction, whether it is of goods or services, will get taxed. Parallel amendment was made in Schedule 2 also to remove just one slide before. So earlier in para 7 of Schedule 2, only there was the supply between the members and the association was the good supply of goods was getting covered. Now this is removed to consider everything, whether it is goods or it is service. That if there is any transaction between the members and their body, which is constituting this constituted by the association of these members, gets taxed. So again, being a retrospective amendment, there could be doubts that whether it should attract interest liability and all. In our view, there should not be any interest liability because this is coming as a new amendment. While it is coming from with a retrospective effect, there has been Supreme Court rulings in this regard, which will protect us from paying any interest on any such liabilities. Yeah. The last part of these amendments is there are certain deadline which was extended for filing applications for the scripts, which was earlier 31st December 2021. Now this has again been extended by 1 month considering the COVID scenarios and all. This has been extended to 31st January 2022. But the only sad part is that beyond 31st January 22, no extensions will be granted. There is a concept of late cut, that if you file after a particular deadline, there is a late cut which is applied while giving the benefits of the scripts. After 31st January 2022, this will also not be allowed. So this is the upper limit. So those who have not still filed their applications for the scripts and these MEIS, SCIs, etc., please, you still left with another 15-16 days. Please file it on time. Otherwise, you'll miss the bus. You'll not even get it even after applying the late cut. Next one, please. Tushar, can we move to the next slide? Another very important change that has come in the customs tariff, very important for the GST classification, because GST classification is highly dependent on the customs tariff. The classification is done on the customs tariff. So what has happened is that WCO has announced a new edition of HSN. And since India is party to this the HSN convention, they have aligned the tariff for everyone. They have given certain reference code, access code, with which anyone can check what is the which HSN has got changed and what is the change in that HSN. So going forward, and this tariff is implemented from 1st January 2022. So maybe everyone might have to once again go back and look into their classification if there is any classification in the category, because these 8-digit, 6-digit classification is something which is important for GST also. So people who are dealing with goods sector, this is a very this is going to have a very wide impact on the classification. So maybe you need to just pass through all your classification once again and see whether it is aligned with the new custom classification or not. Next one, please. Tushar, next slide, please. Now, the last segment, we'll quickly take up some 2-3 very crucial judgments which have come up in last few months, which is of interest for, I think, everyone, and very, very common topics, because there are umpteen judgments may not be relevant for everyone. The first one being very important, the Supreme Court's order on, again, because of the COVID scenario being coming again and again. So the limitation period, which was getting over in 2020, got extended till October 21. Now again further extension has been granted. So the period from 15th March 2020 till 28th February 2022 is excluded for calculating the limitation. So wherever you have any filing, any appeals, any refund application, which is all pending filing, you can once again look at those those applications and those scenarios where these limitation period has been excluded, and you have still have time to file them. Maybe wherever there was any loss of opportunity can also be looked at it. So this is coming as a relief to all the taxpayer, because yes, the COVID has disrupted the routine transactions, the routine business. So this judgment, this order is a very, very, very welcome order for all the taxpayers. Next one, please. This is again very interesting judgment which has been given by the Chandigarh High Court, that Chhattisgarh High Court, sorry, which is given after there was an issuance of circular on the interpretation of word subsequently held, which was used in section 77. For the interest of participants, section 77 of CGST Act allows a person who has inadvertently paid any tax as interstate supply instead of intrastate supply. And likewise, a parallel section is in section 19 under IGST Act. If you paid something as interstate supply instead of intrastate supply, so you can make the correct payments and take the refund of the wrong taxes. So many times, due to interpretation issues, these things were coming up. Now, what happened when people started identifying these issues and they go for refund filing, the department started rejecting the refund claim, saying that the term is being used as subsequently held, which means it should be the authorities who should, identify these errors, and only then you will be getting the refund. Otherwise, if suo moto you are identifying, this kind of refund was not eligible. To clarify this confusion, there was a circular which was issued by the government in 2021 September, clarifying that the word subsequently held will also cover the scenarios where the taxpayers have suo moto identified this kind of a glitch or an error at their end. They can very well pay the correct taxes and claim the refund. They should not be denied. And following the circular, Chhattisgarh High Court has given a favorable judgment. So wherever in any case, any of your cases are pending, or wherever in any of the cases people have paid anything incorrectly, and you're not able to adjust it, because an ideal scenario would be, instead of going into the refund, if you can adjust that excess tax that you have paid, a very favorable situation for any taxpayer. But in case you're not able to do it, then this is a circular and this is the judgment which can help you to claim the refund of these taxes, even if it has not been identified by the department. So it's a very welcome judgment for all the taxpayers who have been struggling in the refunds. Now, very favorable, another favorable judgment, like LGW, which Tushar has also discussed when we were talking about the matching concept, etc. High Court has very clearly held that you cannot hold a taxpayer or a person liable for any non-compliances by their vendor if he has taken all the steps at his end. If he has verified the transaction, he knows that the person is a bona fide person, according to him, he has paid taxes to him, he has got the goods. Any non-compliances or by any supplier, whether they are existent, they are not existent, you are not supposed to catch hold of the recipients. Please go and catch hold of the suppliers and figure out how you're not going to do it. So again, those cases where the authorities or department are just hounding behind the taxpayers, that because they cannot catch hold of suppliers, so recipients are easily available, so quickly just start issuing notices to them and start collecting ITC. A very welcome judgment by Calcutta High Court, safeguarding the position of all those bona fide recipients who have not been party to any connivance which is done by the supplier. they in their own wisdom have genuinely paid taxes and taken the credit can take the benefit of these judgments, and no credits can be denied to them. Now, the last judgment, again, another controversy which has been time and again been in discussion, the taxability of notice pay and all this. So prior to GST, we have a very clear-cut High Court judgment which said that notice pay is nothing. It is just a condition in the contract, and it's just to prevent a employer to bear the damage if if an employee is just simply walking out without serving the notice period. But unfortunately, we were getting a lot of negative ARs. The authorities at lower level were also not agreeing that no, there is a declared service, it should be taxable, etc., etc. So this triple AR, which has been given in the case of Bharat Oman Refinery, clarifies the position following the same principle which have been followed by the Madras High Court pre-GST regime, saying that the employer will never benefit out of these transactions. This is only a contract, a condition in the contract which is put in to ensure that the employees, they serve their notice period and then they move, so that in between, in the meanwhile, the employers can arrange for the other the substitute. So there is nothing that the employer has tolerated. It is just a damage that he has been given by the employee, and it should not be taxable. There were several other issues also on the employee recoveries, which were tackled in this particular advanced ruling. Like we talk about the medical insurance premium, and when we talk about the telephone bills, very clearly it was held by the authorities that these premiums and the bills, etc., the company is not one doing the business of insurance services or telephone services. They are just facilitating the payment of the charges to the to the concerned offices. So they are not providing any services. However, there's one aspect which was covered in this particular ruling regarding the canteen services. They said that the wherever the employer are providing canteen services and doing some minor nominal recovery, according to this ruling, there is no taxability on this part. But in our view, this is still a transaction which can be covered under taxes wherever any nominal amount is being recovered from the employees for providing any canteen services. Wherever there is any free supply, the question of any tax doesn't arise at all. So with this, I would end the session, and maybe we can take up the question answers now.